Hello and welcome back to my channel. It has been a tricky week for me day trading in the Forex markets. We are well into the summer holidays and the financial markets are reflecting this drop in volume and more unpredictable market movements. Although I have still been trading, I've been trading less and less, and I have found the markets to be trickier to trade as per my trading strategy. As such, I have taken a losing trade this week that I'm going to break down with you on the charts, analysing exactly why I took this trade and what I have learned from this trade, which hopefully you will also learn something from as well. All of the software that I will be using is linked in the description below. Please remember to like and subscribe to my channel, and let's get straight into it. Before we break down the losing trade step by step in TradingView, I'm just here in my broker in MetaTrader, just so that you can see the actual trade that I took here on pound dollar, the fact that it was a real trade taken in the live market, my entry, my exit, and of course my loss in this case with the commission. But why exactly did I take this trade? This trade was taken on Thursday the 7th of August. My first step in taking this trade was to look at any news that was due out, and for that I used forexfactory.com. Prior to the New York Open on the Thursday, which is at 1:30 GMT for me here in the UK, I had a look on Forex Factory. I could see that on the Thursday we had major pound news, monetary policy, which was out at 12 o'clock. And then at 1:30 we had the usual weekly unemployment claims for the dollar. Now, I'm not even too bothered about what the news was, because I'm not a fundamental trader. I'm just bothered about how the news affects the markets, what sort of catalyst, how it provokes the movements. And to get the answer to those questions, I jump onto my charts here in TradingView so that I can carry out some technical analysis. I've used the backtesting tool to take the charts back in time. So this was just at the New York Open at 1:30 on Thursday, the 7th of August. And this is just looking at intraday candlesticks. The first thing you may notice is this large candlestick here. It was the largest candlestick so far of the day, and that was the 12 o'clock candlestick. So that coincided with that news release that we saw for the pound, the monetary policy reports, which was good news for the pound and helped it to push up with some strong momentum. Now, we are currently in the summer holidays. It is summer trading and it's very quiet in the markets, which is why I was looking to take this trade on this day, because this was the movement I was looking for, the volatility, to try to capitalize on the markets. Let's look at market structure for the current day. From the current daily open here, price had pushed up. We consolidated through the Asian session. We had a drop down, making a new low of the day. And then as we kind of entered pre-London session, we got a pop up, breaking this high of the Asian session range. During the London market, price kind of consolidated, but it's gradually moving up. We didn't close below the low and we made a new high. And then, of course, during this 12 o'clock news release, we had a strong push up, making a new high of day. We had a small pullback here with some support built, and then another push up with a slight close above this previous high. It's quite a slow market. There aren't any notable big moves, but it's safe to say that the trend is up on this current day. We're making higher highs and higher lows. And so I want to follow this market sentiment by looking for an entry for a long. But the big question, once you have your daily bias, is where to get in, where to buy in this case. And what I was the most interested in was this little support we had here. That was the previous high. And this was the new high. Now, it is only gradually higher than the previous high, but it is a new high, looking at the bodies only. And so I placed my Fibonacci retracement tool from the bodies of this previous low here and dropped them at the high, which gave these three areas of optimum trade entry. Now, I felt that this was quite high up. It's buying near the highs, which made me a little bit nervous. So I decided to drop to a faster time frame, the 5-minute time frame. It gives a little bit more information, and I can adjust my Fibonacci to these new points here on the 5-minute, which puts my entry a little bit lower, and it gives me a better place for a stop. So I look to place my entry here with a stop, a 20 pip stop, which was just below the structural support. And my target was a 30 pip target above the high here. So I'm aiming to make more than I'm looking to risk for the trade. Why do I use these points of the fib tool? For me, over time, they have proved to be very accurate. The optimum trade entry, they are the 62%, 70%, and 79% levels. The fib isn't automatically set up this way, but you can go into your settings here and into the style, and you can edit these points and basically just change the figures to suit what you want your fib to show. The default figures usually show the half and the 0.34%, but I find these to be more accurate. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes, and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. Usually when I'm placing a trade, I would wait for the market to come down at where I'm looking to get in. Give me some kind of confirmation signal before I actually get into the market. But in this case, I was quite busy. I was looking after my preschoolers, and I didn't trust that I would be able to be on my phone live with the markets in this way. So I set a buy limit order, which meant that my order was sitting there together with the stop loss order and the take profit, waiting for the market to come down and trigger me in. And that's exactly what happened. It consolidated for a while, and all this time I wasn't watching this on my phone. Then price came down and triggered me in. Of course, I'm looking for that immediate bounce up, but instead price came down and it stopped me out here at 4 o'clock. This is the frustrating thing about this trade, is it literally just stopped me out, and then it turned and it went up to my profit. And I find that this is quite an annoying situation. This has happened so many times in my experience as a trader, and it's one of those things that can sometimes happen, or it can indicate that there's a slight flaw in your plan. So how can we learn from this? I think first of all, it's safe to say that I followed the right direction. I was correct in looking for a long, because that was where the trend was that day. That was where the strength was. Price was still drawn to go up like a magnet. So the fault must have been in my entry. Well, I realize it is summer trading, and with summer trading means there's less volume, it's a little bit less predictable, and so it probably makes more sense to not drop any faster than the 15-minute time frame. And in fact, if we look back at the chart here, I was aware that my entry was quite high. I brought near the highs, and this only just broke slightly above this level here. But what would have happened if I removed that fib tool? And if I'd have placed it at this previous structure down here, which was very clearly the previous low before this move here, and dropped my fib tool at the high. So I've made 2 alterations. I've dropped to the higher time frame, the 15 minutes, the larger time frame, and I have just changed my Fibonacci retracement settings to go from this major structure here, where price had been consolidating for during the London and established the stronger support. And you can see that price comes down and it comes quite close to this optimum trade entry level before taking off. But looking at that, I don't even know if I would have gotten into that, because my order would have just been below that. So it probably wouldn't have triggered my buy if I had an order set at this point anyway. So there are 2 ways of looking at this trade, really. You can look at it and try to learn from it and see how you can avoid making a mistake in future, or you can just accept that it just wasn't meant to be this trade, it just didn't work out. You win some and you lose some. My biggest lesson taken from this trade in particular is to remember that we are in the summer holidays. It is summer trading. There is less follow through, less volume. It could be more helpful to use the larger time frame. I've even dropped back to the 30-minute time frame here, which I don't use very often, but you can see this clear double bottom pattern around the same time. So originally my order was to buy at this point here from the 5-minute time frame with that 20 pip stop that just got tapped. Whereas from the 30-minute, we can see that price came down and pushed up. It made a new high, breaking above this one. And then it came back down here and made this double bottom pattern before taking up again. You could take this as an entry using that pattern alone, a double bottom pattern, or I could have used this Fibonacci tool and it would have given me this little pattern here where price came down and then we got the green push up again. Very similar to mirror bars at this optimum trade entry. That probably would have been a safer entry with the stop below the low here. Another way to read this, especially with summer trading, would of course to have used a larger stop loss. Which again, it's not something that I would usually do. I tend to use a 20 pip stop as a max, but we are in summer trading. If I had used my original order but had a 30 pip stop, a much larger stop, and the same 1.5R target, I would have been in this trade overnight, granted, but it would have eventually hit. So there are a few different ways that you could look and analyze this losing trade. But this is a very useful practice that you can carry out, especially after a losing trade, to look back over, review it, think about how you would have done it differently, and try to see if there's anything that you can learn to take moving forwards with your trading to help you to learn and grow. There's always something to learn when trading. If you've enjoyed this video, if you've learned something, do let me know in the comments below. Please remember to like and subscribe to the channel, and I'll catch you in my next video. Thank you for watching. Bye.